All right, what is up, traders? What's up, tycoons? Super excited for today's video. We're going to look at MakerDAO, ticker symbol MKR, breaking things down on the daily time frame as always. We're going to go over, what we had in the previous video. All right, so the previous video setup. And then we also, if we zoom in a little bit more on the daily chart, we have this bump and run pattern that we currently are experiencing right now. So we're going to break that down as well. All right, so make sure to smash the like button, subscribe to the channel if you guys are new, and we're going to go ahead and jump straight into it. But before we do, the content provided in this YouTube channel is for informational and educational purposes only and is not intended to be relied upon as legal, financial, or investment advice. Myself and any individuals that appear on this YouTube channel are not registered financial advisors or brokers. Trading in stocks, bonds, commodities, and crypto involves significant risk of loss and is not suitable for all investors. So be sure to read through the full disclaimer. Now, this is our current setup that we have. All right. So we do have this head and shoulders that I pointed out in the last video. I said we need to be cautious of this and look out for this to possibly form. As we had a left shoulder, we had a head. And if we got a strong move up and we weren't able to get above our 50% retracement level here, which was 840.95, then we were going to be putting in a right shoulder, which we've done now. And possibly going to head back down to retest our demand zone here. And if we break through this demand zone, then possibly we're going to hit our bearish price targets of $516. All right. Now, things don't have to play out that way. Okay. There's still a lot of work to be done for us to hit that bearish price target. But this is just something that you guys need to be aware of and start preparing for just in case. What are you going to do if this scenario does play out, right? Are you going to have some type of a stop loss? Are you going to, sell and try to buy back lower? These are some of the things that you want to think of. Now, the reason that we have these three yellow lines right here, these are the three Fibonacci retracement levels, and you use these to identify trend continuation versus trend reversal because nothing moves in a straight line down and nothing moves in a straight line up. Rather, you would get a move down retracement continuation of the trend or a move up retracement continuation of that trend, right? And so on our most recent rally that we had back here in, October, all right, you can see we came up towards that 50% retracement level, and then we ended up continuing that downtrend, right? And so look at what we did here recently. We retraced up near that 50% retracement level, and we have the possibility of continuing that downtrend if we break through, our most recent lows and we get this head and shoulders to play out. So that's something that you want to keep in mind and be considerate of. Now, our demand zone here is going to be a strong area of support. It's about 600 up to about 650 roughly. And you can see that each time we've entered into this zone, we've seen lots of demand and lots of buyers many, many times, especially on the higher time frames, such as the daily. And we've seen price action push back up afterwards. Now, one thing you need to keep in mind is the more times you test the zone, the weaker it gets, right? And so a demand zone is simply an imbalance of buy orders. So we have, more buy orders than sell orders here, and all these times. And so you have to ask yourself, are these buy orders being replenished and replaced each time they're filled? Or if we come back down and test those zone, is there no longer going to be that imbalance? And if there's not, the market can either consolidate, right, and just be in a balance between buyers and sellers. And if not, if the buyers aren't replenishing their orders, there is a chance that we could fall through here until we get to another area of demand, aka support. All right. Now we're, as I mentioned, we rejected that 50% retracement level. If we do get a move to the upside, 763 is going to be our major resistance. And then we have that 840, and then we have that 918. Now, if we can get above 918 and flip that from, resistance to support, that's when we have the chance, okay, of retesting our supply zone and our first bullish price target here of 1019. Above there, we have another bullish price target of 1134. And above there, we have 1,280. But as you can see, there's a lot of work to be done for us to hit those levels. So right now I'm just paying attention to some of the different patterns we have. You can also use the MACD and the RSI to really help give yourself an edge. And if you take a look here, we see this red line cross below the yellow line here. That's what's known typically as an exit signal. And so that happens right around over here on the chart. And you can see we had a very strong push to the downside back into our demand zone. Now, after we hit that demand zone, what did we do? We actually curled back up to the upside, and we see the red line curl above the yellow line. That's an entry signal, and we come up right up near our 50% retracement level before getting rejected. So the MACD is very useful for spotting potential entries and exits. And if you take a look at what it's doing now, it's moving sharply to the downside, but we haven't fully crossed below. So we can bounce off of this yellow line here and continue back upwards. But if we get a strong cross to the downside, that's going to be another potential sell signal. Okay, now on top of that, we have we're currently bouncing off of this RSI trend line right here. Okay, and if we break below this trend line, that's going to be pretty significant because that is a look above and fail. Now, a look above and fail is significant because, bulls are essentially presented the full opportunity to, really push things higher and bounce off of this area. And if they don't take advantage of this opportunity, it's going to show that the bears are the ones who are actually in control of price action right now, not the bulls. And it's going to be, an indicator that we could move lower. Right. That's what happened over here last time we got a look above and fail. Right. We had the strong push up and then we pulled back, and rather flipping the 61.8% retracement level to support from resistance, we actually just broke down below and we weren't able to close above this level and really try to push up higher to the rest of our bullish price targets. So keep an eye on your RSI and your MACD. Now, not only do we have this head and shoulders and some of the different signals right here, if we zoom in, like I mentioned, we have this bump and run pattern currently. Quick message from today's sponsor, guys. We have the Tangent Cold Storage Wallet. All right. Now, if you don't know by now, you can't really trust these exchanges with your cryptocurrency. If it's not your keys, it's not your crypto, and you really don't know what they're doing with your cryptocurrency. So you need to get your money off of these exchanges and put it in a hardware wallet. Now, I recommend the Tangent wallet. All you have to do is go to the Google Play Store or go to the Apple App Store and download the Tangent app today. Okay, if you use code ZACHLY, ZACHLY, you guys will get a discount on your purchase. Okay, all you have to do is scan and activate your card, set up the password, and make transactions. So it looks like a regular credit card, but it's actually a hardware wallet, and it functions without any batteries, wires, and connectors. So no longer do you have to plug them into your PC, plug them into your laptop, anything like that. It takes 1 to 3 minutes to set up. It literally only took me 2 minutes to get mine set up, and they're sold in packs of 2 or 3 cards. And the additional cards, the reason you get a pack of 2 or 3 is because those are going to be backups. Just in case something does happen with your original one, you have those others as backups. So that way, if you lose it or it gets stolen, your cryptocurrency is not actually gone forever just because you lost that one. You actually have backups. So I think that that feature is really, really awesome. It allows you to have multiple cards for the same wallet. So that way you can back them up, and you want to store them in separate places. That way, somebody can't, get all of them, or, if they steal them from you, or if something happens and you lose them, you don't want them to all be in the same place. Now, it's DeFi compatible, which is awesome. I really love that. Okay. It's compatible with Uniswap, guys, with Spooky Swap, Trader Joe, many of the top swap, dApps, decentralized applications, as well as Curve Finance, Yearn Finance, and many more. It also supports 2,700 cryptocurrencies currently. And what's really awesome about it, besides the look and just how cool it looks, okay, is it's waterproof. You can completely submerge it in water. You can freeze it and it will still work. And it's also temperature resistant as well. So remember, download the Tangent app today, okay, and make your purchase through the Tangent app. And when you go to checkout, use the coupon code ZACHLY, ZACHLY, and you guys will get a discount on your purchase while also supporting the channel. So guys, this bump and run pattern has really become, one of my favorite chart patterns that I've been using over the past couple months. And essentially, you spot it by this prevailing uptrend that you have, and then you get a bump in the price action. So if you take a look, we had this, prevailing uptrend, and then all of a sudden here, right around the middle of April, we saw a bump in the price. Okay, and we saw a strong push up, and we actually broke that trend line here. Okay, retested it, so we got a break retest, and now we're pushing lower, and we just broke below our prevailing uptrend, guys. And so if that's going to happen, all right, the way that this chart pattern works, it's going to take you back down to where the pattern originally began, right in this area. And as you can see, that's going to take us into that demand zone that I gave you guys from about 600 to 650. Here's that RSI trend line. And if this breaks down, we talked about the look above and fail and why that's significant. It's going to show that bears are in control. We have a bearish chart pattern right here. And if we get that breakdown below right here, then, you know, we're going to see that bears are in control. And we also have that MACD right here, just looking to decide if it's going to curl back up or curl back down. So, you know, I don't want to say that this thing has to fall and come off super bearish. I just want to be, you know, actually realistic and really prepare you guys for some of the different patterns, right? You know, a lot of these patterns, they also work to the upside. A lot of these signals, they also work to the upside, but you can't be too biased to where you ignore some of the bearish signals and don't have at least some type of plan or strategy in case to protect yourself if you're in a trade, or, you know, protect yourself if you're a long-term holder. You know, there's different things you can do, but hopefully you enjoyed this video and appreciated this content. If you did, smash that like button and subscribe to the channel. And most likely, you know, if you made it this far, you're really going to enjoy one of these next two videos as well. So make sure to click on one of those.